Hey everyone, I'm going to start off this HPS watch list video with a little education. Now, going into next week, we're coming out of a week which really was quite a volatile week. We had a lot of news. We had the jobs report that just got finished today, being Friday when I'm recording this, and then we had, of course, news throughout the week on certain scenarios playing out, the Ebola outbreak and the case here in America, and then the Hong Kong protests going on. There's still issues over in Ukraine. So all these things, all the news here came at the same time and really pushed this market down, and we started moving back up. But during this whole process, we were actually able to identify a great indicator that I don't usually talk about that much, but we always look at it when we have to look at it, and it's called the TICK, the TICK, the New York Stock Exchange NYSE tick, and we'll go into the whole thing, what the tick is and stuff, but we actually use it to kind of judge extremes in the market, short-term extremes to be exact. So once you start to see an HPS type of zone where you have a lot of things starting to add up, you're either extremely overbought or oversold, and you feel there's a good thing, you could actually keep an eye on the tick also. And look for that special little extra bonus indicator to let you know, a real good tight time frame where you could get into a position, and that's what I like to tick for. So, and again, everything's really on a short-term basis, especially with the tick, because the alerts it gives you, and when it does give you the alerts that I'm going to show you, it's these things sometimes give you great entries. But mostly they give you a good bounce, and it should be considered a bounce technique, or at least a stock movement technique. You could fade the tick, and it's really called base to fade the tick. When we get an extreme negative tick, we're looking at selling exhausting itself, and then buyers coming in and bouncing it. And the same thing with an extreme high tick. Buyers here continue to buy, and then it's kind of a euphoria of buyers. And when it tops us out, there's no more buyers, and it sells off. So we look for those extremes at the same levels we're looking at HPS zones. So let's talk about the tick in general. The tick is just a way of reading how many stocks are trading on an uptick minus how many stocks at the same time are trading on a downtick. And to know that, you have to understand an uptick and a downtick. And an uptick is basically a movement in price from the last price, basically. So lots of times the stock will be trading at the same price for a while, but once you ever move from that price up to the next price level, it's an uptick. So it has to be on a price increase or a price decrease if it's a downtick, and that's how it's based off of. So you just take those numbers of stocks trading on an uptick minus the numbers of stocks trading on a downtick, and then you have your tick. So, and really the levels here is you get about 1,000, a little bit sometimes extremes 1,200. That's really the extreme is 1,000. So we like to put the alert in here around 1,000, minus 1,000, or plus 1,000. And with that, anything that gets down below that is really extreme, and that's when I start to look. So these are some examples that we called live in the market this week. This one came out. I believe it was Wednesday, and it was looks like about 310. It was. Let's actually. There was another one here. I think back here. Oh no. Let's see. This one is going back here. Let me see this. All right. So it's right here at 11, a little after 11:40, and you can see the low in the day came with that, and we were actually measuring out this tick chart here, and I was saying, well, we're going to watch for this extreme low tick, and we just kind of put a line there just to kind of represent it. We got that right when we were talking about this, and we circled this area saying, all right, this was our low tick, and you can actually go out and see the result of the market after that point. I mean, it really just took off. And this was actually one of the high tick areas. And you can see you get a little pullback in what it's meant to be. And sometimes, like again, this is also an HPS zone. So there's a big difference between the move you come off an HPS zone when you have that daily 60. You actually had a trend line here on the cash. You had everything here lined up pretty good. So I mean, that's just it. But let's just go back to the tick here a second. And that was 11. All right. So we're gonna go. That was all right. Here's the 11:45 one. And then there was one back here. It looks like there was a low, and again, you see that green line. That green line just represents those lines. So anytime I just follow that green line back, good way of back testing. You could do it yourself. You could just bring up your own charts, back test the tick, say, all right, this is under 1,000. What time was this? It's about 3:10. So you go out here to 3:10. I already have it circled right here. And this was your HPS zone because it was also on a trend line. But you could see the nice move off of this. And that was really a low tick level also. And you can probably, let's see if there's anything else out there. I don't remember if I back tested this or not. But you could see the green line not really being challenged. It was one time back here about 1 o'clock. That's nothing. But you really want to see that breakdown. Oh, look at this. All right, here's one back here at Monday, right at the beginning of the day at 9:30. You had a low tick, 1,000, over 1,000, low tick on Monday the 29th. See if I could actually go back there. Wednesday, Sunday. All right, here we go. So it would be at the morning here at 9:30. So here it was, right here. So this was the low tick here. And again, you can see the move from that. So each one of those low ticks or extreme low ticks was a big bounce area on the market. And again, it's just extra knowledge. You know, basically that's what we're looking at. It's just extra knowledge, something to look at, a tool of the trade, tools of the trade. You've heard those little bonuses that could help you identify really good entries. I mean, if you have all these things working for you, that's great. A technique, I love techniques that come around. You know, it's not something that you have to always wade through. If it's there, it's there, and it doesn't come off that often. So it should be recognized when it happens. And even if you don't take the trade, follow it, see how it works, see if it works for you. You know, if it does work for you, and you see there's a relationship between that type of trade, then tweak it to use it as your own. I'm going to finish up on that little segment there, just in case people out there want to be able to program this in. If you're using the quote tracker, what I like to do is right-click on this, go to new alerts, in case I already have an alert, so I'll just go to the old alert. You're going to see the same screen. This is my high tick. Put in the price level. I put 1,050 in it. I also put an audio alert that I made with the online wave maker. You can just make something. This is what it sounds like. So it kind of prepares me, because this now could just run underneath all my charts, and if I have a high tick, you'll hear this.
Extreme high tick over 1,050. Could be a fade opportunity.
Just something. You know what? I jazz it up a little, have a little lady talk to me. But it just kind of keeps me in tune with the market, and it gives you that. So I don't have to always be watching that tick chart. I think it's a great thing. Of course, you're going to hear it on Day Trading Radio. I'm going to have this playing in the background every day. But there's no high ticks today here, extreme high ticks. I also want to, so again, you could also draw that line up here just to kind of measure it out and just say, all right, I want to make sure thickness. I want to, what was this? Oh, you know what? I don't even have that. All right, I just want to put that line in here at 1,000 also. You can make it whatever line you want, but anything above 1,000 is usually good. Sometimes a little bit higher than that is good. I just went back here, kind of measured out the only two high ticks the other day on yesterday. So let's just kind of measure those out a second and see what they look like. So this was about 126, and we had a high tick of 1,039. Again, 126 Thursday. So let's just take a look here. 126 Thursday. Hope you don't mind me doing this. Was that yesterday? 126 Thursday. Right here. So, all right. Just circle that off here. Close to the top. I mean, that was a little high tick spike, and this was the other one. I remember the other one. I do remember the other one. What happened at 3 o'clock, or about what time is this? 254. Let's just take a look at 254. Very close, very close. But the other time was high tick here at over 1050, 1414. That's 214, and that's that's right here, right there, green candle. So that was a high tick also. And each one of those high tick did give you a nice little fade action. And that's what it's, again, I wouldn't look for these big moves. This is what you want to look for on the high tick. This is it right here. If you can get a couple points out of that, you're a winner. If you get any kind of edge using the high tick, you probably will. Only thing this will go against you is, of course, when there's extreme news out on one side of the market. Market could get pinned up here, high tick. Hopefully you're going to kind of feel that out beforehand. But if these
extreme
are just
high tick alert,
live on the air, live on there. That's a high tick we just had here of 750. That wasn't an extreme high tick. I have different alerts on my high ticks, but as you can see now, going back live to the market, you can actually see the market moving back up here. So it helps, Good little tick there. I hope you enjoyed that little segment. And we'll continue on now with the watch list.